The government has terminated the engineering, procurement, construction and commissioning contract awarded to the Chinese contractor involved in the 81 billion ringgit ECRL, a source told The Edge today. This comes just days after the Australian reported that the contractor, China Communications Construction Co., was asked to inflate the quote for the ECRL by $7.5 billion or 30.8 billion ringgit to plug the multi-billion-dollar hole in 1MDB by controlling stakes in two companies linked to Low Teck Joe and paid tens of millions of dollars to unnamed consultants. It also follows a report by the Wall Street Journal last week that said the Penang-born fugitive financier had a role in facilitating deals with China to bail out 1MDB in exchange for lucrative railway and pipeline projects in Malaysia. The ECRL project was suspended in the middle of last year, and CCCC was instructed to stop all related works and services until further notice, pending a review of the ambitious project. Now is a good time to invest in Malaysian equities amid low stock valuations, a stabilizing ringgit, and potentially greater clarity on policy reforms in the country, according to Manulife Asset Management. Tok Chin Hui, its head of Total Solutions and Equity Investments, says instead of looking at sectoral play, investors should be selectively picking stocks based on valuations. Tok says Malaysian equities are currently trading at about 24.3% below their historical price-to-book ratio average, and such valuations are unlikely to persist amid the existing currency market dynamics. She also notes that the US dollar appears to have peaked and that such funds may flow back into the Asian region. As for Malaysia's policy uncertainty following the outcome of GE14, Tok says the concerns and headwinds will still linger. However, she believes there will be more clarity on policy reforms within the first half of this year. Goldman Sachs CEO David Solomon's apology to Malaysians failed to appease Putrajaya, which is gunning for $7.5 billion in compensation from the bank over its dealings with 1MDB. Solomon had said in a conference call with analysts that Malaysia was defrauded by many individuals, including its own ex-partner and star dealmaker Tim Leisner, whom it blames for pulling the wool over its eyes. Finance Minister Lim Guan Eng isn't moved. He scoffed at Solomon's bid to place the blame squarely on Leisner and says the investment bank was only apologising now that there is a new government in Malaysia. He adds that Goldman has to pay up for the apology to Malaysians to be adequate and for the government to consider dropping its suit against Goldman. In December, Malaysia filed criminal charges against the US lender for its role in misleading investors in the 3 bond sales it arranged for troubled 1MDB, while knowing the money raised would be misappropriated. MRCB George Kent, the turnkey contractor for LRT3, says it will not be seeking any compensation from either Prasarana Malaysia or the government following the remodelling of the project's delivery partner contract into a fixed-price contract for the project. Project Director Patrick Huang Chi Leong told The Edge this is because the priority is to move this project along smoothly and at minimal cost without burdening taxpayers. He expects the new terms to be finalised and the new agreement signed by the end of this month. Over the last couple of weeks, speculation was rife among the construction industry players that MRCB George Kent would seek 200 million ringgit in compensation from Prasarana for the remodelling of the PDP contract. As a PDP, it would have been earning a 6% fee on the final cost of the LRT3 project. Malaysia has appointed Mizuho Bank Malaysia, HSBC Bank Malaysia and Daiwa Markets Singapore to raise 200 billion yen or about 7.6 billion ringgit in samurai bonds. The 3 will be the joint lead arrangers in partnership with Affin Hwang Investment Bank. The appointments were made after 6 proposals were shortlisted from the 27 received by the MOF. As part of a government-to-government arrangement, the Japan Bank of International Cooperation will be guaranteeing the 10-year bond. This will allow Putrajaya to pay all-inclusive indicative coupon rates of less than 0.65% per annum, including the guarantee fee. Finance Minister Lim Guan Eng, who is spearheading the exercise, says the bond is expected to be raised in the next few months. He will lead a Malaysian delegation to Tokyo next month to meet with all the relevant investors to ensure a successful bond-raising exercise. The last time Malaysia and Japan made samurai bond arrangements was in 1989.